A very good evening and a warm welcome to all the crypto buddies. I would like to welcome you all to today's webinar. I'm Rekha Khan, your host for the webinar, and we have with us today Mr. Kiran Jani, expert on technical analysis. Today, we're going to be talking about trading strategies in cryptocurrencies for beginners. On joining, you would notice that you are in mute. If you have any questions throughout the webinar, please write them on the chat section. At the end of the webinar, we would be holding a Q&A session where all the queries of the participants would be answered by our speaker, Mr. Kiran. From the creator of Odin, MCX and IEX, here is yet another credible and exchange-neutral platform a user can rely on while walking towards the path of crypto and blockchain understanding. Starting from education to knowledge to all the latest news, all covered under one super app, CryptoWire. From a novice to a professional trader, every market participant can have a slice of information readily available on the touch of their finger. Let's first walk you through the world's first crypto university, crypto TV, and crypto wire services. We all know that crypto and blockchain ecosystem is emerging at an immense speed, and to keep a track of all the events, prices, and news looks to be difficult. So what if we have an app like our buddy who walks with us, thinks like us, responds to what we expect? Yes, you heard me right, our own global crypto super app, CryptoWire. Let me take you through the app briefly. This is the global crypto super app, CryptoWire. Let's start with the homepage of the app, which covers all the three pillars: Crypto University, Crypto TV, and CryptoWire. Under the CryptoWire services, we have rolled out India's first global index of crypto, IC50. It tracks the performance of the top 15 cryptocurrencies globally based on market capitalization. Crypto enthusiasts and crypto traders can take informed decisions based on IC50. WireWatch, in this section, we can monitor the best exchange to buy and the best exchange to sell a particular cryptocurrency. In the center of the screen, we can monitor the arbitrage opportunity available between the two exchanges for the same cryptocurrency. There are more than 350 cryptocurrencies listed on our platform, along with 70 plus crypto exchanges worldwide. Coming to our crypto TV, it's an exclusive 24/7 IP TV covering everything on crypto and blockchain ecosystem. It is currently available in 3 different languages: English, Hindi, Marathi, and Gujarati. Talking about Crypto University, being the world's first digital university to offer courses on crypto and blockchain, we can find the best courses offered by MIT and University of Michigan at a single click of the app. With this, I would like to introduce you all to the speaker of today, Mr. Kiran Jani. He is going to be introducing us to trading strategies in cryptocurrency for beginners in a layman language. Kiran Jani has over a decade of experience in tracking the Indian equity market. Being a commerce graduate, he's currently working as a head technical analyst, catering to retail as well as corporate clients. His passion for tracking the Indian equity market has got him a long way. He has worked with companies like Kotak Commodities, Axis Securities. He is also regularly featured on CNBC Bazaar and ET Now Swadesh. He's been tracking the crypto market since the last 6 years, and he's a very active trader. Today, he's going to be talking on the basics of technical analysis, and he will be sharing a few patterns and trends. Join me in welcoming Mr. Kiran. Hi, Kiran.
Yeah, hello. Thank you.
Hi.
Thank you for inviting us, and thank you for the wonderful introduction to audience. Thanks.
Welcome.
Okay, it is visible, right?
Yeah, it's visible.
Okay, so thank you. So hello, everyone. And thank you for organizing such kind of a webinar where we can share our knowledge and we can share our experience to the audience, and where we try to explain that how they can start trading or maybe investing, etc. So this is my one of the favorite quote, and I regularly start anything with the quotes only. So whenever it's come to the trading or the investment part, we generally focused on the how many times we goes right and how many times we goes wrong. So it is not about trading or investment is not only about the going right or wrong. It is about if you goes right, how much sizably you are going right, or if even you are going wrong, then how sizable you are going wrong. So in market, if you go right and if you are not sizable, then even 90% at accuracy level, you are not able to making profit. So every time we focused, or I generally believe, to ride a trend. When there is a trend in the market, ride that particular trend and make a big money. This is what the crux of today's webinar also. So starting today's webinar, so whenever things comes to the trading or maybe investment, then particularly we should understand that what kind of a trader or investor you are. So if you are a trader or you are a momentum trader or a momentum investor, then technical analysis is one of the tool which can help you. So I believe that many people understand technical analysis, basics of technical analysis, and they know a few more things or maybe some advanced things into technical analysis. But for the benefit of the all the participants, I am running through from the very basics of the technical analysis, that what is technical analysis and how does it work, and how we can apply technical analysis into the crypto trading. Like many people say crypto trading is not easy, it is very difficult because it is running all the time, it is very volatile, etc., etc. There are so many different assumptions and understanding, or may I can also say myth. But if you understand technical analysis properly, it can work on any kind of an asset class. And I am using the technical analysis on the cryptocurrencies. I am doing trading since 2016, if I'm not wrong. So there are various types of techniques, but today we are going to learn about one of the very simplest system which can used by the any of the profession. Like say for example, you have XYZ job, or you are in to XYZ business. With that business or with that job, if you want to generate a passive income from trading of the cryptocurrency or maybe investing into the cryptocurrency, you can use such technique which we are going to discuss later part of this presentation, and you can generate a very good income, or I can say passive income. So let's start with the basic understanding of the technical analysis. Like what is technical analysis? So technical analysis is always about the price actions, right? We always focus on the price. That is most important for us. Why price is going up, why price is coming down, we are not bothering about that. So that is the main advantage of using a technical analysis on the crypto. Like understanding the fundamental of the crypto, it is not that easy. Understanding the blockchain and all kind of a technology, probably it's not easy or not a job of everyone, right? So here the technical analysis can step in, and where you are doing a technical analysis, if you doesn't understand what is blockchain, what is the technology, or what not other more things, that is fine, but you should understand your price action. If you understand price actions properly, you can generate a good income using a technical analysis. So let's understand more about the technical analysis. The technical analysis, what is the characteristics? So technical analysis is the study of the price and the trend changes in various market instruments. So as I mentioned, you can use these techniques on various instruments, different instruments, including you can use multiple cryptocurrency, that is fine. You can use any kind of other instrument like equity, commodity, this can work out, no problem in that. What other characteristics of the technical analysis? It is indicator and the oscillator, right? Based on the price and based on the some statistical calculation, there is a price, there is an indicator and oscillator which can suggest you the clear trend. And the main important things of the technical analysis is about the assumption. These three principle or three assumptions is most important. You require to believe this all assumptions and the principle. If you don't believe into this principle and all assumption, then it is very difficult for any person to believe in technical analysis or maybe to follow the technical analysis. So what those assumptions? So first is market discount everything. Market actions discount everything. So price is going up or down, that market is already known that what has happened and what is going to happen. Price is always know about everything. Second, price always moves in the trend. So whenever prices start moving up, it will sustain for some particular time and then it's reverse. It is not like that today is up, tomorrow will be down, right? So prices generally moves in a trend over a period of time. I'm not talking on the day on day or maybe intraday point of view, but I'm talking about a very longer term time. So say for example, in a day you can see where a volatility, but if you check out the weekly way, the volatility is probably lesser. If you check on monthly basis, the volatility is again a very limited or maybe very narrowed comparing to the daily or maybe intraday way. So, and based on this, you can identify your trend also. So if you are an intraday trader, you generally need to require identify the trend for the intraday. But if you are an investor or maybe a swing trader or maybe a positional trader, then you are required to identify the trend for the set of a time or a particular time. Then last but most important, that history repeat itself. Markets knows everything, and that's why history always repeat itself. What has happened earlier because of some other news, it will again react same way. So these are the main three assumptions we have to focus, we have to understand, and we have to believe also. Now, using a technical analysis, or even we don't know technical analysis, we all know about the three trends. So there are three types of trend in the market is available. So what those three types of trend? So one is the uptrend. We all know that what is uptrend. When market keeps going up, it is called an uptrend. What is sideways market? It is like market is moving into the some particular range, that is called a sideways market. And what is downtrend? So downtrend is a normal when prices keep moving at lower level. So now if you know that market is in the uptrend, then you can buy right now and sell whenever you feel that market is going down or market start going down. Then you can generate the profit. When there is a sideways market, you can avoid trading or maybe you can avoid investment, which can help you to minimize your loss trade or maybe false signals. And when market is down, you can definitely go short sell on the derivative, because we have a crypto derivatives right now also where you can trade. So in crypto derivative, you can go short sell and buy whenever prices it's very low, and this is how you can generate the return. So now point is that how to identify these trends, whether there is a uptrend, whether there is a sideways trend, whether there is a downtrend. So identifying the trend, it is something called a prediction, but we don't give a name of the prediction. We give name is a evaluation. If you evaluate market every day properly, or you have a very scientific method to evaluation of the market, you can identify a trend very easily and you can generate a very good return also. So how to identify those trends? So there are two ways of identifying the trend. One, it's called the discretionary way, where you require to draw a trend line, draw a chart pattern, understand the indicator and everything, right? So there are various patterns are there for the candlesticks also, chart patterns also, and various indicators also. So these are the discretionary way. Today, because of this pattern, you are bullish. Tomorrow, because of this pattern, you are bearish. Or maybe certain chart are complex chart where you are a bullish and I am a bearish, because we have all discretionary way. But using an indicator, that is a very extra advantage, we can say. By using an indicator, you can generate your own system where indicator is identifying a trend for you, whether there is an uptrend or down. So generally, many analysts use moving average to identify the smaller to larger trends, whether there is an uptrend or downtrend. So today we are going to understand about the two indicators which can help us to identify the trend. So starting with the first indicator, before that, let's understand what is indicator. So indicator is something calls or suggest us into the relative method. So let me give you example. Say for example, you are riding a car. Your car is at 40 speed. Whether it is a fast, whether it is a slow, we never know. But when the second cars come on the track and it is going on 60 speed, then we can say relatively we are going slow, because that car is going on 60, we are at 40. Similar way, something is going on, some other car is going at 30, then we are at average. We are not going very fast at 60 and we are not going at 30 at very slow, but we are at average 40. So this is what the indicator is doing. Indicator is a relative study that it will give you the analysis of the price, that whether price has a strength or not, whether price has a trend or not. People think that indicator and oscillator is to analyze and can focus factor one should use in combination. Generally, what people do, they use indicator in isolation. Just one indicator they use and they want to decide the market. So that is something very difficult, but it is not an impossible. You have to understand that particular indicator very deeply, and then you can understand the market. One thing understand, my friend, very clearly, that though all indicators are the derivative of the price. So price moves first and then indicators move. So focus on price should be there. And let's understand the first indicator, that is moving average. So moving average is very simple. It is the identification of the trend. So whether there is an uptrend or downtrend, we can identify in the moving average. We all know a common formula of the average. Everyone knows, we have learned into early maths that how to identify the average. But in moving average, every day close or maybe every minute or maybe every hour close is which help us to move our average. So say for example, if I ask you to get an average of 10 unit, then the answer is simple. We have to sum of the 10 unit and then we divide by the 10. So that is our constant moving average. But when there is an 11th number comes, what we do, we skip first and we do calculation from 10 to 11. We sum those number, divide by 10. Then it is called a moving average. Every day there is a 1 unit to add and our moving average constantly going up. So that is called simple moving average. There is another moving average is exponential moving average, and another is a weighted average moving average. So calculation is changing moving average to moving average, but you are not required to memorize those calculation. Nowadays we have a lot of software and a lot of freeware website also where those indicators are freely available. So what is important? Important is to understand the indicators, how to use it. So this is what, if you use moving average on your chart, this is how it does look like. So I have used Bitcoin chart and I have kept the simple moving average. SMA is simple moving average, EMA is exponential moving average, and WMA is weighted moving average. So here you can see like in coffee color, there is a weighted moving average. It is very sensitive. Whenever price moves, it's move very fast, either side, up or down. Then a lesser smooth or lesser fast, we can say that is your exponential moving average, and very lazy moving average, that is called simple moving average. So use of moving average is like double-edged sword. Either side, if you have a very fast moving average, then probably in single day big move can hamper your moving average value, and you can exit or entry into the market. Where lazy moving average, like simple moving average, which can help you to digest the volatility, and that's why I always use the simple moving average. Right now, how to use moving average on the chart? So it is a very simple. You open any Bitcoin chart or any cryptocurrency chart, you plot moving average on that. Which moving average, number of moving average, we will discuss in this slide. So this is very simple chart. You can see this is the Bitcoin chart. I have taken this chart from 2017, from the first bull run has started. 2016-17, the first bull run started from, if I'm not wrong, 200 or maybe $300 was the price of Bitcoin. And from 2016, we have say one-way rally to 20,000. And if you are using a 200-day simple moving average, so why 200 days? So many people says it's a yearly average, but how does it comes to the yearly? So this is for the equity market, but this works for the cryptocurrency market also. So simply 200 days yearly, if we see Saturday and Sunday is not working, then if we cut down those days, then 104 days are cut it down from 365. So ideally through 261 is the trading days, but these are not right. There are 30-40 holidays are also there in any country. So if we deduct those days also, then 220-230 days are there where the normal market is running. But out of that 20-30 days, like, okay, we have a holiday, but some other country doesn't have a holiday. So because of the liquidation or maybe liquidity volume game, we generally take 200 days is our yearly average. So use is very simple. Whenever your prices cross your moving average, we are buying, and whenever your price is closing below the moving average, we are exiting our long position. This strategy is for the investor only, or a person who like to do long only. You buy, you hold until you get the exit signal. So here you can check You got a first buy at somewhere around 340 or maybe $400. You are holding that particular crypto, and you are selling whenever the price is closing below the 200 DMA. So here you can see in 2018, we got the first sell signal at somewhere around 7,000, right? So from even $500 to 7,000 in a 2 year, the entire bull run you have captured. So this is nothing but very amazing strategy. Say for example, you are doing a derivative, crypto derivative, where you can short sell also. So here, whenever price cross under price moving average, you can go short also. So if you have shorted over here, you can cover here. But let assume you are not doing that short sell. We are only doing buy. So here you can see again your price is crossing your moving average. So you are buying there also, right? And here prices is crossed down your moving average. So you are selling here. So you can check the gain. This is okay. Chalo, one bull run was there. We probably captured or not captured, but this kind of a small move you can also capture. So it is also a sizable somewhere around 3,000 to 11,000 you have captured. So 4,000 points you have captured on the Bitcoin. Similar way here again, somewhere around 7 to 8,000 you got a buy call, and here at somewhere around 40,000 we got the exit call. So from 2017 to 22, only sizable, there are 2 trades are sizable, but there are many wrong trades are also available. Here you can see that is called patience testing. Here multiple buy sell has happened. You never generate any kind of a return. Probably these are the losses trade. Here also the patience testing time is going on. Market is not in the trend, neither up nor down, right? And because of that, there is a multiple buy sell is happening. But that is fine. One day when the market is giving you a big bull run, you will be inside. Just imagine here from $500 to 7,000, you already made 6,500. Here from 3,000 to 7,000, again $3,000. You add into your balance 65 plus 3,000 is equal to $9,500. Here again you bought at 7,000, you exited at 40,000. Look at the profit, right? At 33,000 plus 9,000, you already made up $43,000 when your Bitcoin running at $40,000, right? So this kind of a big profit you are earning using a 200-day simple moving average. Now going forward, say for example, you are not long only trader, you want to do a trade also. So for trading, you can use the RSI anyway. So RSI is relative strength index derived by the Weisweidler. Recently he passed away in 2020 due to COVID. RSI is simple oscillator. It is moves from 0 to 100. Traditionally, use of RSI is like above 70, it's overbought, and below 30, it's oversold. So overbought means the market is run up too much, and below 30, market is crashed down too much. So this is how the Weisweidler has given the identification or the definition of the this RSI. The standard video of the RSI is the 14 days. So RSI required 14 days data or maybe 14 points to develop the RSI. This is what the formula is. Again, you are nothing to do with the formula. All websites are giving you very much lucrative RSI. So let's understand the use of the RSI. So here I have drawn the line of 70 and 30. As per Weisweidler, above 70 it's overbought, below 30 it's oversold. Here I have identified the area where market is overbought and oversold. So here you can see your RSI is above 70. You probably think that market has run up too much, let exit. But look at what happened after that. Market is going up only, right? We probably missing. Here also you think that market is at oversold condition as it is below your 30 level. Let's buy here, but market is keep moving down, and we never know what is the stop loss and where it can go. It can go anywhere, right? So again, here you can see your RSI is above 70. You think that market is oversold, but when to sell, we don't know. So what Weisweidler has said, that is something like very holistically, you can identify the trend, but it is very difficult. You have to be very pro to use RSI. Otherwise, you should require to understand the chart patterns and everything. Otherwise, based on the Weisweidler, it is very difficult to use RSI. But Mr. Andrew Cardwell has identified and gave us a very brilliant idea to use of the RSI. Let's understand that. So he has given this 3 formula to us. When your RSI is greater than 60, it is a bullish zone. When your RSI below 40, it is bearish zone. When RSI is between 40 and 60, it is a neutral zone. You should not trade when RSI is between 40 and 60. So let's understand and I try to identify these trades. So this is simple. Whenever your RSI is going above 60, you are buying, and whenever it's coming down below the 60, you are selling. So here you can see from somewhere $31,000, $32,000, or you bought and you got exit somewhere around 40,000. So $8,000 move you got here. Similar way here again, RSI is going above 60, your price is at 40,000. Here your RSI is coming down 60, and you probably exiting here is somewhere around 50,000. So again, $10,000 of profit. Now understand, you are doing a short sell also, right? So here you can see your RSI going below 40, right? So here you are shorting the market somewhere around 42,000. Here your RSI is coming above 40, you are covering here 38,000. So again, you are making a profit. Of course, here also there are few trades I have not captured, that is called patient testing time. This is the area where your RSI is going above 60, but your pricing is not moving. Probably here you made a loss. Same way here, your RSI going below 40, but prices is not moving that much. This probably a loss trade, but that's fine. It is a very nominal loss. Again, you are capturing this big move, right? So this is again a very simple strategy, but effectiveness is very high. So let's have another use of RSI. Let's understand we are using moving average plus RSI together. Then how to use it? So say for example, as I mentioned that 200 days moving average, the yearly average, then 100 days would be the semi-annually and 50 is the quarterly average. So as we are a very aggressive trader and we want buy sell too much, then probably you can use a 50 days moving average. In 50-day moving average, probably the trades are very much, the frequency is very much. So to taper down those high frequency trade, we used RSI. So the simple condition is that I have mentioned over there: buy whenever your price is above 50 moving averages and your RSI is also above 60, and you have to exit whenever your price is going below 50 moving average. Here you're not required to consider RSI. Similar way, if you want to go short, your prices should below 50 and your RSI should below 40. If it's happening, you go short sell, and you to cover your short it's whenever the price is above 50 days moving average. So here on chart, blue line is your 50 days moving average, and bottom you can see the RSI also. So let's check. I have marked out your green zone is above 60 is your bullish zone, and red mark is the below 40 is your bearish zone. Now we have to check whenever our price is crossover, the 50 days moving average and RSI is greater than 60 or not. So first trade we got here, you can see your prices has crossed over the moving average and RSI is above 60 level. So our first buy happened over here somewhere around 33,000. And whenever your prices cross under the moving average, so here it is cross under, so we got exit over here. So from 33,000 to 45,000, this is a sizable move we got from this particular strategy. Now let's see one more. Here again your prices cross over the moving average, but your RSI is not above 60. But from third candle you got your RSI crossover also. So you bought here somewhere around 45,000 and you are holding and you are exiting over here 59,000. So it is an either or. If you are checking your price, it is above 50 but your RSI below 60, then you have to wait once the RSI has to go above 60, then and then you have to buy. If your RSI is above 60 but price is below 50, then even you don't require to buy. You have to wait that to cross over 50 days moving average. So it is a one or other. Either one has to cross over and one is greater than, or both can cross over together also. The same way, if you think that market is going down and you want to do a short sell, then this is the case when the prices has to below 50 and RSI is also below 40. So here the first trade you are getting here, when your RSI going below 50 and your price is always already below the 50. So you are shorting over somewhere around here, and our exit condition, your price is close above the 50 days moving average. Here you are buying also. So somewhere around 51,000 to 42,000 or maybe 40,000, again a decent profit. So you can see from August 21 to till now, you only had 1, 2, and 3 trades. Out all 3 trades are profitable, and all 3 trades, if you count the profit from 32,000 to somewhere around 40,000, $8,000, from $45,000 to somewhere around 52, again close to $5,000. 5 plus 8 is $13,000. Again, this $42,000, sorry, $50,000 to you got a exit of $45,000, so 5,000 again. So more or less in last 9 months, I can say from July 21 to till now, we made close to $15,000 to $18,000, and we only had 3 trades using this particular strategy. So I request everyone, if you want, you can capture this particular slide, or you can take a screenshot of this slide, and this is how you can generate your intraday trading. Or this is not exactly the intraday, but this is like buy and hold, or you can use a short sell also and generating the good profit. But let me tell you one thing also, during this trade there are a few area when there is a patient testing time, like here your price is moving above below moving average, your RSI is also below 60, you probably had a one short sell over here, but you are making loss. The loss is somewhere around $2,000 to $3,000. Same way here, you are running with the loss kind of a trade. Your RSI is moved up 50, you closes over here. So here also $2,000 to $3,000 loss is there. So this kind of a area will come when there is a no clear trend. In that particular market, you have to hold your patience and you have to follow your strategy, because you never know from which trade you are going to get such kind of a sizable move. So believe in your strategy, and you can start trading or maybe investing by using this strategy which we have displayed. We have displayed 3 strategy. One, you have to buy and hold whenever your prices crosses 200 days moving average. Another, we used that whenever your price is crossing 60 RSI, sorry, your RSI is closing above 60, you have to buy and hold until your RSI goes below 60. And third one is very simple, either your price cross over moving average 50 or your RSI greater than 60, and one condition has to fulfill, then you can buy. Exit criteria is very simple, whenever your price close below 50 days moving average, you have to exit. And for the short sell, it is like either crossover of 50 days moving average, cross down 50 days moving average, or your RSI closing below 60, 40, you can go short sell. And short exit criteria is very simple, whenever your price closes above the 50 days moving average, you have to exit. All 3 strategies are the trending strategy, my dear friend. So in any kind of a trending strategy, your accuracy always below the 40 or maybe somewhere around 45. It means if you are taking a 10 trades, then 4 to 5 trade only goes right. Rest all are the wrong trades, or we can say you have to book the loss. So if you are okay with the 50 kind of 40 kind of 40%, 50% kind of an accuracy, then only follow this kind of a strategy. And in trending strategy, there is a one thing that we are doing a trend following system. So if there is a trend, we are going to make a massive money, right? There are very few trades which comes and go, but there is only one trade which sustain for the sustainable time, a sizable time, and then you can make the profit. So understand your strategy properly, and then only you follow this kind of a strategy. Now, how to convert your analysis into the trading and investment, whatever we have discussed. So this is a simple process. First, you have to understand the cryptocurrency. I'm not talking about its fundamental. I'm talking about simple, when it's starting, the trading time, ending trading time, what is the settlement, whether there is a derivative is available or not. So this kind of things you have to understand. After that, you have to make your own universe. Say, for example, ma'am has said there is an IC15, there is a 15 cryptocurrencies are there. You want to trade into that, you can. That is an industry standard. Otherwise, you can make your universe from the market cap. From this market cap to this market cap, I only trade. Otherwise, below that or above that, I will not trade. Kind of. So this is called your own universe. And based on your universe, you can customize your own screener. Whichever crypto price is above 50 days moving average, or maybe 100, maybe 200, depending on your flexibility and your aggressiveness, you can identify. And then whatever strategy you feel comfortable and confident, you have to put and deliver. So what kind of strategy you can use? As I mentioned, First is discretionary one. You can buy and sell after the pattern and price confirmation. So we have not discussed those part, but whoever understand, there are various kind of a pattern is available. So if you understand pattern, you can use those pattern. Apart from that, we have a combination of a price and oscillator, which we have discussed, that whenever your RSI closing above 60, you can go buy. Whenever your RSI closing below 60, you can exit your buy. Whenever the price RSI goes below 40, you can short sell, and whenever your RSI is above 40, you can cover your short. Similar way, there is a trend following system, which again we discussed, that if price is close above the 100 SMA EMA or maybe 200 EMA SMA, you can go buy, and whenever price is close below that, you can go sell also. So this kind of a various strategies are available here. We are going to we have displayed only 3 strategy with the using of 2 different indicator, and both indicator are giving the idea of the trend. Moving average is always about the trend, and RSI is always about the trend and the strength of the trend. Now, before going for the trading or investment, you have to identify your own characteristics, whether you are an investor or a trader. So say for example, you are very fast and aggressive, then there is an eligibility, you can become a trader. And if you are very slow and accumulative zone kind of then you probably the investor. A trader can do a trade for the hours, day and week, when investor holding for the months and the years. Strategies, what trader use, it's a momentum and chart is what we have shown. RSI is all about the momentum. When there is a momentum in market, RSI give you the buy call. So that kind of a trading style called in traders trading style. If you are an investor, then you are a value investor. So say for example, there is a crash into the crypto market and you are identifying the value and the base value of that particular crypto and you are buying, then it has become your value investor. Now trader is competing with other trader or maybe computer algo and etc. When investor is facing or competing with the market sentiment, there are a lot of rumors is going on, a lot of negative news going about the cryptocurrency. Still you are holding, so that is called competing with the market sentiment. What are the tools? So trader can use chart, real-time news, real-time data, everything. Where investor can use fundamental as well as the combination with the technical analysis. So using a moving average or whatever strategy we have discussed, investor can also use that particular strategy and generate the return out of it. Trader intensity. So of course, trader are doing very high to medium kind of frequency. Buy sell is keep happening. Wherein investor, like we mentioned, from 2017 to till now, only 5 trades happened into the trader community of using a 200 DMA, still generate a very good profit. So the intensity of the trading is very low. Risk level, of course, trader has a very high risk because the trading is going very frequent, where investor always have a low to medium kind of a risk, as the trading frequency is very low. Apart from that, I used to share this particular two my famous personality, or I can say my role model. One is the Marty Swatas and another is the Paul Tudor Jones. I hope second one everyone knows because a lot of quotes are going on. So I really like what Marty Swatas said about the technical analysis. He won the US investment championship in 1984, and when he asked that technical analysis work, what he replied, you just have to understand this. I used fundamental for 9 years and I got rich as a technician. So this is something very big what he said. And he always advocate about the moving average is what we are discussed already for the identifying the healthy stock and looking the positive divergence into the price actions and etc. Now let's understand what Paul Tudor Jones has said, that he is using both system and discretionary trading, and look at his result from 1983 to 2012. He generated 24% CAGR. So if one said that technical analysis is not about the investment, then that is wrong. By using a technical analysis, you can invest also, as we also showcased that using a simple 200 days moving average on crypto, you can generate massive return. So with this, I would like to end my presentation. I hope that you people got a knowledge about the trading and the investment also. And I hope that whatever explained that helps you in upcoming time for your trading and investment. So thank you very much. If any questions are there, we'll happy to take you.
Thank you, Kiran. That was a very interesting and an informative session. All jitne bhi maine sessions attend kiye technical analysis was a very, very, very basic information which was very easy to understand. Trust me. I would like to thank Kiran for taking out time and sharing his views on today's topic in a very layman language. I would also like to thank all the wonderful audience who've shown interest in learning and making informed decisions before entering the crypto market. I have a few questions which I have gotten for Kiran.
Yes, please.
Yeah, so let me just start with the first question. The first one is, what are some of the common approaches to trading in crypto?
So as I mentioned that trading into the any instrument, you should understand the product knowledge. If you don't understand the product or the instrument product, I mean to say instrument, then it is very difficult for you to have a belief to hold a particular trade into that. So first understand the product. So let's talk about the cryptocurrency. So if you want to trade into the cryptocurrency, first understand the product. What is the blockchain? At least basics understanding you get it. And CryptoWire is doing very fantastic job. There are lots of webinars or lots of videos are available where the ecosystem has been explained. First understand that, and then you decide if you are an investor or a trader. Based on that, you can identify your way. Either technical analysis can help you to become a trader and even an investor. So as a technical analyst, I would recommend technical analysis is the best way. First understand product, and then using a technical analysis, you can start trading.
Right. Second question is, where can an individual learn technical analysis?
So there are various things and various numerous videos are available on YouTube nowadays. But what I prefer that if someone has to start doing the technical analysis from zero, then I would like to recommend one book that is called Technical Analysis of the Financial Market, written by Mr. John Murphy. One should read this book, understand this book. It is a very big book, but it is a Bible for any beginners. And one who read this book, and if you want to go in advance, then read Encyclopedia of the Chart Pattern, written by Mr. Thomas Buckwitz.
Okay, great. Thank you. The third question up is, what is the difference between fundamental and technical analysis?
So basically, generally, the difference between the fundamental and technical is like when to buy, when to exit. It is all about the timing. When it is all about the timing, it is called technical analysis. When it's come what to buy, what not to buy, then it is about the fundamental. So it is simple. Like there is a lot of other definitions are also there, but in simple language, आपको क्या buy करना है और क्या buy नहीं करना है वो fundamental बताता है. लेकिन आपको कब बाई करना है और कब सेल करना है वो टेक्निकल बताता है. जैसे हमने व्हाट वी हैव जस्ट एक्सपीरियंस इन आवर प्रेजेंटेशन दैट there are a lot of fundamental has been changed over a period of time from 2020 to 2021 into the crypto market. During that market we have seen a bull run, we have seen bear run, everything has been there. But 2017 में जो बुल रन आया वो एक साल टिका. वो फंडामेंटल वाला जब तक समझे तब तक टेक्निकल वाले ने एंट्री लेके एग्जिट कर चुके थे. Right, so it is all about when to buy, when not to buy. So technical is about when to buy, when not to buy, but fundamental is always about what to buy, what not to buy. So I think if you want to become a trader, technical analysis is far better.
Absolutely, absolutely. Thank you. The last question up which we have is, which technical indicator is best suited for cryptocurrencies?
So in technical analysis, it's like nothing bad and good. All indicators are good only. It is about the behavior of the human being. So say for example, very good quotes I have read somewhere that if you are making money in stock market, it is not about the stock that is growing. It is your behavior that you are holding that particular stock. The same in crypto also. It is not crypto trading or the crypto investment making money, but it is your own behavior that you are holding particular trade or particular investment for the longer run time. And you believed on your strategy. So in technical analysis, all indicators are good. You just digest the volatility of the crypto. You just digest the drawdown period in your defined trading strategy. And then it will work for you.
Absolutely, it will. So with this, I would like to thank Kiran for the time he's taken out for all of us. And I welcome all the crypto enthusiasts to please download the Cryptowire app today and be a part of the global learning. I would request all of you to please share your valuable feedback on the session so we can enhance our sessions better. Thank you so much, Kiran. That was a really interesting session with you, and looking forward to many more sessions like this. Thank you. Thank you all. Have a great day. Thank you for attending the webinar. Thanks, Kiran.
Thanks
Have
for
a
the
nice
inviting
day.
us, and thank you very much, and have a great weekend ahead, everyone. Thank you.
Thank you so much. Thank you. Bye.
Bye.